On today's episode, I'm going to talk about four stocks to watch this week. We have crazy earnings coming up. And today, for each stock, we're going to look at a revenue breakdown. We're going to take a look at their recent earnings. And we're also going to look at their future growth. And I'm just going to give my overall thoughts of what I'm going to look for them in this upcoming earnings. Like always, if you're new to the channel, make sure to subscribe and don't forget to hit the like button. It helps the channel out so much and I truly appreciate it. Remember, none of this should be taken as advice as I am not a professional. And let me know in the comments below, what earnings are you guys excited to see? What earnings do you guys want me to do a video on? The four that I'm going to mention today are ones I'm going to do a video on. But if you guys want me to do any other, feel free to let me know in the comments. While you're down there, don't forget to join the Discord channel. It's free to anybody that wants to join. And don't forget to click that Webull link. If you sign up and follow the rules, we both could get a free stock. Finally, tonight, Sunday at 8:30, I am live streaming on Twitch. I do it every Sunday, and you should find the link down there below. All right, so first, let's take a look at Monday. Monday, it's usually a slow day, but dude, this week is actually going to be pretty excited. The company we're going to take a look at in today's episode is going to be Alphabet, also known as Google. But some other ones that are worth mentioning that people might want to look at are Chegg, right? They are in the educational world, and right now schools are back in session and doing a lot of online learning. So Chegg might see a nice boost around there. And the other one is Twilio, ticker TWLO, I believe. This has had some crazy news since the last earnings and right now has reached all-time highs. It's pretty impressive what Twilio is doing right now. So the first stock we're going to take a look at today is Alphabet, ticker GOOGL. Or GOOG, depends whichever class you want to buy. Current price right now is sitting at $1,632. And it has a market cap of about $1.1 trillion. Year-to-date returns right now is sitting at about 26%. So we can see not crazily overextended. But one thing we're going to see is Google makes most of its money from advertisement. With the COVID-19, a lot of companies slow down their expenses. And one of the biggest expenses they usually slow down is advertisement. So I believe this is one of the biggest reasons why Google is not up dramatically like many other companies we've seen. Right now, it is down about 5% from its all-time high of the year. So it did see a small pullback, but it's kind of creeping back up to those all-time highs for this year. So let's take a look at their most recent earnings, which were July 30th of 2020. Overall revenues did decline about 1.7% compared to the same time last year. And right now, it is still making a crazy amount of money, $38.3 billion of revenue per quarter. They did see near double-digit slide in the search revenue. Like I mentioned, this was advertisement was one of the biggest segment hit, but it was heavily offset by the increase of cloud revenue. Google has Google Cloud. They are a cloud service provider, and those are doing amazing right now. That revenue jumped 43% compared to the same time last year. A quick revenue breakdown of Google right now is Google Search and others makes about $21.3 billion. This is the advertisement they get when you go to google.com and look at something. That was down about 10% compared to the same time last year. YouTube ads were $3.8 billion. That was up 5.8% compared to the same time last year. So a lot more people were watching YouTube. A lot of people were paying for those ads. Google Network members properties. These are other small websites or other applications that Google owns, and they put advertisement there. That was $4.75 billion, and that was down 10% compared to the same time last year. The big one is Google Cloud, but look, Google Cloud only makes up $3 billion of the total revenue. So even though it is a pretty impressive segment, which was up 43% compared to the same time last year, is still a very small section in regards to revenue for Google. Then we have Google Others. Here you have like their phones, you have their smart home applications, and that is $5.1 billion, and that was up 25.6% compared to the same time last year. Then they have a lot of other small companies with crazy innovations, but that's called Other Bets, and that makes less than 0.1% of their total revenue. I want to say it's $148 million out of that $39 billion of total revenue. So it's pretty much nothing, but those are just future innovations that hope in the future can grow to some crazy company, right? The company, this most recent earnings did also authorize a $28 billion in stock buybacks. So that was the recaps of last earnings. Now let's take a look at future growth. So Google is still growing at strong levels despite it being a giant, right? This is $1 trillion company. In the next 3 to 5 years, average annually is expected to grow about 14.6%. And these are the things I'm going to be listening to in this upcoming earnings. Is first, the overall strength in the cloud business. We looked at Intel's earnings on Thursday, and they mentioned that cloud server providers were still seeing a huge growth. Google being one of those service providers, I want to see how much strength there's still in that cloud business. Other things I want to see is how are advertisement doing for this most recent quarter, right? This is the biggest segment of revenue, and I do believe a lot of these companies are going back to normal, if I may say. So did that advertisement pick up? I also wanted to take a look at what another shutdown can happen and how can it affect Google, just for me to really understand some of the risk, some of the short-term risk, right? And right now, another shutdown can affect Google by reducing that advertisement cost, like I mentioned, right? That's usually the first cost companies take down before anything else. So that can usually, since this is a major segment of Google's revenue, this can be something that one needs to take a look at if you're an investor in Google. All right, let's move on Tuesday. Tuesday, we have a lot of crazy companies, and I honestly don't know what episode I'm gonna do on Tuesday. On today's episode, we are gonna take a look at AMD. My episode that I did yesterday, where I took a look at the 4 stocks I bought this week. I talked about Microsoft, so I didn't want to mention that one again. But if you guys want to learn more about Microsoft and why I bought it, make sure to check out that video that I did yesterday. Every week I talk about all the stocks that I purchased. I'm a long-term investor, and here I'm looking for new investments every week. So Microsoft was one of them, and I usually do a quick analysis on them. So like I mentioned, today's episode, we are going to take a look at AMD, right? Yes, last week Intel did pretty bad. We saw that 10% drop, and we saw a nice increase in AMD due to that negativity from their rivals. But now has it overextended? That's something we're going to have to see. Some other ones that are worth mentioning are the big boys here. We have Caterpillar, we have 3M, and we have Pfizer that's in the COVID vaccine play. But we have those big guys. We also have Raytheon Technology that's in the defense sector. If some people are interested in airlines, we have JetBlue on Tuesday before open. And one of the crazy growth that minus AMD and Microsoft is 2U. ARK Investment has purchased 2U. I don't know how they've been doing in the past few weeks in regards to 2U, but I know they do have a position size in 2U. So I know some people like to follow ARK. So that's one that will be Tuesday after close. So like I mentioned, today we are going to take a look at AMD. So AMD, ticker AMD, right? That's Advanced Micro Devices. Their ticker is AMD for all my podcast listeners. Right now, it has a stock price of about $81.96. Pretty impressive. It was up 3% on Friday. So right now, market cap for AMD is about $96 billion. This is insane. I remember when this company was sub $10 billion valuation, and now look at this. It's almost a 10x. Right now, year-to-date returns for AMD have been 67%. Pretty impressive, if I may say so. So congratulations to all the AMD shareholders right now. But it is down 11% from its all-time highs of the year. On September, we had that pullback, and some of these companies did give a lot of their gains back. I do believe that's healthy, right? It's healthy to see a pullback so sometimes they just get overextended. So it is down 11% from that all-time high. So last earnings were July 28th of 2020, and they have two major segments in their revenue. First, they have the computing and graphics sales, and that was $1.37 billion last quarter, and that was up 45% compared to the same time last year. And this was due to the strong Ryzen processor sales, and they did have a weak GPU sales, which was a little eye-opener that, hey, Ryzen is definitely a strong monster in its platform. AMD is killing it in the CPU sense, but the GPU sense, it seems like by looking at this, and we also look at it in their enterprise world, GPUs is not in the consumer's eyes the level that Nvidia is doing. One thing they talked about in this recent earnings of July 28th was that they did see a nice improvement in market shares in the CPU for the cloud servers. but they didn't see that same type of growth in the GPU. So that's telling me one thing. One, AMD is taking a few market share from Intel. The second thing it tells me is Nvidia is still a monster out there. And let me say this, I do own a position in all three. I'm pretty bullish in the semiconductor industry, so I like all three. So it's not like I'm favoring one over the other. But Nvidia is showing right now that it still has the strength in the GPU sector. So then we have the enterprise, embedded, and semi-custom. Here you have your EPYC servers. Here you have your chips for the gaming, for the new gaming consoles. And that was down 4% compared to the same time last year. And that was about $565 million. So most of the revenue actually comes from computing and graphics sales. But they did see a huge growth in that EPYC sales, again, leading to taking some form of market from Intel or just growing there. They did see record notebook and server processor sales caused by Ryzen and EPYC revenue to double this year. That was insane. For quarter three, AMD expected revenue of $2.45 billion to $2.65 billion. That's up 42% compared to the same time last year. And the major reason is they're expecting that strong Ryzen, they're expecting strong EPYC in the clouding service. They're also expecting strong numbers due to the semi-custom, which includes the benefits from the next generation consoles. So AMD is still growing at strong levels. For the next 3 to 5 years, average annual growth is expected to be 18.8%. That to me is definitely a strong growth. Things I want to watch out this quarter is one, the strength in the clouding business. Are they still seeing an increase in regards to the CPU market? And like I mentioned, last earnings, they didn't show that kind of hype on the GPU for the cloud servers. I want to see if that has changed, or is Nvidia still kind of holding on to its market share there. Now I also wanted to take a look how another shutdown can affect AMD. In my opinion, it's a double-edged sword. It is in a positive way. It could help it especially if economics don't change, if don't get affected. More working from home means more components for like laptops, desktop, gamings, cloud servers, but it also means a slowdown in production depending on how the close downs and shutdowns happen worldwide. So it's I want to say a double-edged sword. Now we are here on Wednesday. On Wednesday, we're going to take a look at one of the companies I've talked about a lot in this channel, and that's Fastly. If you want to do more analysis on them, feel free to check out my catalog. I've talked about Fastly before, but there are some other ones worth mentioning that are huge growers. We have Pinterest growing Pinterest, Etsy, and Fiverr all growing at crazy amount of levels. In the health tech, I want to put, we have Teladoc and Livongo, soon to be a super company, right? And in the finance, we have Visa. We also have MasterCard. I actually didn't see that. In the finance, we have MasterCard as well. And some people might want to look at Gillette, General Electric, Boeing's, UPS, and Sony. So there are some. Wednesday seems to be crazy day. And like I mentioned, if you guys want me to do a video on any of them, make sure to let me know on the comments below. So Fastly, this is ticker FSLY. It's going to be the third stock I'm going to be watching. Current price right now is $76.35. Market cap of $8 billion is one of the smaller ones we've looked at today. Year-to-date returns are still up 256%. But right now, it is down 40% from its all-time highs of the year. This is one that is an extremely volatile company. That's crazy. It lost about 40% of its total valuation once it reached its peak. So let's take a look at Fastly's most recent earnings, which was August 6th of 2020. And unfortunately, August 6th, it did have a bad night, which shares were down almost 18% that day after reporting quarter two. The company did raise its full year guidance of 2020 in the most recent earnings. They now expected about $290 to $300 million for the year, and that was an increase compared to their previous guidance of $280 to $290, so an increase of about $10 million in revenue guidance. For quarter three, Fastly did expect 73 to $75 million in revenue. But if you guys have been following Fastly, this most recent, I think it was like 2 weeks ago, they did mention that there has been a slowdown on the revenue they were expected. I think now it's back to the range of about 71 to 73 million. So not much of a change, but I guess investors were expecting them to beat this guidance. So that's definitely driven down the price. One of the major reasons is they are not seeing that type of usage from one of their biggest customers, which is TikTok. And since they are paid in a usage type manner, not in a subscription manner, they're seeing a slowdown from that revenue. And here they mentioned in their last earnings that TikTok was their biggest single customer and made up about 12% of the first half of revenue. And right now, with all this talks of banning TikToks and just the overall tension with that with the United States and China has really made this stock even more volatile than it already is. Now let's take a look at future growth. Fastly is still expected to grow at crazy levels, 3 to 5 years. Average annual growth is expected to be 24.4%. Things I am going to watch out for this quarter is one, future guidance. With their new acquisitions, they just acquired a new company. I'm forgetting the name of it right now. But now with this new company, this quarter that they are about to mention here is not affected by it. But the future quarter 4, is one that will be affected with the new acquisition. So I want to see that kind of guidance. Second, I want to take a look at how leadership addresses their issues with the slowdown on revenue, mainly because of that TikTok drama that's going on right now. I also want to see what type of new customers they're grabbing and who are these new customers. It is one thing I like to see is when a big company is not a big portion of their revenue, because it makes it very volatile regarding to that company, like we see with TikTok right now. With TikTok, it's kind of affecting Fastly because it is its bigger customer. So what you want to see is an increase of revenue to decrease that kind of connection with its biggest customer. Next, I want to take, like always, I want to take a look what another shutdown can affect. And in my opinion, Fastly would be one that would be affected in a positive way. Obviously, if economics don't get affected. More working from home means more demands for the compute edge, more bandwidth. So applications and designers are going to want their products running, websites, their servers running on tip-top shape. And that's where Fastly comes in. And now let's take a look on Thursday. On Thursday, we got another powerhouse. And like I mentioned, I'm not sure who to do on Thursday. So if you guys want me to do one, let me know in the comments. On today's episode, we are going to take a look at Apple. But some other big names out there are Amazon. We got Facebook, some big giants. And then we got some crazy growth. We have Shopify. We have Spotify. We have Apps, Digital Turbine. And we have Carvana. Those 4 have seen crazy amount of growth right now. And obviously, me being bullish in the gaming, we have Activision, Blizzard going. A lot of people might be interested in Twitter. Nokia with their now program to help put something in the moon. I haven't really looked at. Overstock, I know it's another super growth one. And some people might be basic and want that Starbucks dividends, right? They want those Starbucks earnings coming up. But like I mentioned, today's episode, we are going to take a look at Apple. This is ticker AAPL. Current prices right now is $115. Market cap is, I think Apple is the biggest company right now, right? With a $1.99 trillion market cap. Year-to-date returns are about 53%. Insane. Congratulations to all the holders, and you're getting a dividend with it as well. From its all-time highs, it is down 14%, so there has been a decent pullback even for Apple itself. So on their most recent earnings, which were July 30th of 2020, that was when they mentioned the 4-to-1 stock split. That actually feels like it was so long ago, but it only took effect August 31st. So this most recent earnings was their quarter 3, and they actually beat expectation. They beat analysts. Revenue was up 11% compared to the same time last year. A lot of people were kind of expecting revenue to be down a bit because iPhone sales were such a huge portion of this company's revenue, and they weren't expecting much of it. But actually, quarter 3 revenue breakdown shows that iPhone sales did a lot better than what was estimated. iPhone sales did $26 billion out of that $59 billion, and the overall consensus was $22 billion, so it beat by $4 billion. iPad sales were $6.6 billion. Again, it also beat consensus of 4.8. The Mac was $7.1 billion of revenue, which beat consensus of 6.03 billion. Wearables, homes, and accessories were 6.5, which beat consensus of about $6 billion. Then they have services, which is one of my favorite segments for Apple. I am not an Apple holder, but their services is probably one of my favorite segments. they collect revenue here and money from just their overall app. Obviously, right now there are some fights happening with a few companies right now with Apple's, and that's something with Apple, and that's something that we're gonna have to look at as the years progress or the quarters progress. It's not something that will happen overnight, but I do believe this is gonna be a long-term legal battle for Apple. For example, with Epic, and I know Spotify has had some distaste on what Apple is doing with their store, Apple Store. There we go. So Apple is still a decent growth for its size. For the next 3 to 5 years, average annual growth is expected to be 6.8%. It's not a crazy grower, but that's okay, right? I believe this is a different type of play outside of my growth stock. This is one very similar to my Microsoft play. It's not a crazy growth, but they are in markets I believe will grow dramatically. So things I want to watch out this quarter. They just released the new iPhone. I want to see that strength of the iPhone for the upcoming holidays. Second, right now with the current tensions with companies like Spotify and Epic, I wonder if they're going to mention anything about that on their other earnings. I also want to see, like I mentioned, their strength in their iPhones, but their iPhone was delayed about a month. I want to know if that delay also made some delays on the production side. So are they gonna have enough volume for the holiday? So something I want to take a listen to. Another shutdown I believe can affect Apple on a negative way, even if economics don't get affected. A slowdown in production, depending on where the situation is happening, right? That can definitely slow down production, especially if right now hardware is such a huge portion from their wearables to their iPhones are a huge portion of this company's revenue. So that's something that I believe could affect Apple in a negative way. So I do hope you guys enjoyed this episode. Let me know what are some of the companies you guys want to look at this earnings. And like always, don't forget to hit the thumbs up. It helps the channel out so much. Don't forget to subscribe and check me out on Twitch streaming today in about an hour or two from now, depending on when I drop this video. So take care, guys. Have a good night and see you next time.